Hi there. My name is Klein Hall. I own Klein Hall Agency in Greenville, North Carolina. We're an independent insurance agency representing several companies such as Erie, Homeowners, GMAC, Progressive, Haggerty, and a bunch of others. Today we're going to talk a little bit about a couple different homeowners policies available in North Carolina. And I said North Carolina because this is specific to North Carolina. It does not apply to other states. Alright, what we're going to talk about today are the HO-3 and the HE-7 homeowners policies. If you have your insurance with a company like Allstate, State Farm, Nationwide, Farm Bureau, they have an HO-3 policy. It's a good policy, but they may not even be aware of another policy out there called an HE-7. Other companies such as Erie, Homeowners, Safeco, and some other companies offer a policy called the HE-7. The HE-7 is a superior policy. It has everything the HO-3 has and then a lot more. I'm going to go over some of those differences today. Don't know if you can read this. If you can't, we're going to put it on the video later so you can see it. But the two different policies, I've got two columns, HE-7 and HO-3. Like I said, the HO-3 is a lot of the big companies that advertise all the time have. Their agent may not even be aware that it's an HE-7. Nothing against them. They don't sell it, so they might not be aware of what's out there. The HE-7 has a lot of benefits. Like I said, it has everything this one has, and then it has more. Here are a few of the things that are the benefits. One thing is your policy is limited on how much you can recover if there's a loss involving cash. So if someone breaks into your home or someone robs you, on the HO-3 policy, they rob you and you've got $600 in your pocket, you're only going to get $200 back. The HE-7 policy has up to $1,000. That also covers if it burns or anything like that. Securities, which are like savings bonds, stuff like that, limited to $1,000 on the HO-3, it's $5,000 on the HE-7. Jewelry is limited for theft on the HO-3. It could be as little as $1,000. Some companies go to $2,500, some $2,500, some go to $3,000. The basic HO-3 is only $1,000. But that is if it's stolen. The HE-7 policy covers up to $5,500 per loss to a maximum of $1,500 per item, and that includes any kind of loss. So if the stone falls out of your ring, we'll cover up to $1,500 for that one item, $55 maximum per loss. You'll also hear the word mysterious disappearance used here. Covers that kind of thing. Speaking of mysterious disappearance, for firearms and silverware, the HO-3 policy limits it to 10% of your contents coverage. Say you've got $70,000 worth of contents coverage and you have a theft or a fire, you only get 10% of that, $7,000, for your silverware or your firearms, two different things. Here, it's already $10,000, and that includes mysterious disappearance. So if you go and open your gun rack and you notice two of your guns are missing, but you don't know when they got missing, that's covered up to $10,000. Now, one of the biggest things, and the biggest advantage I see in the HE-7 is the dwelling coverage. With the HO-3 policy, if you get what is called a specified coverage on it, you are covered for up to 125 or 150%, depending on what the company does, of the dwelling coverage. What that means is, if you have a home insured for $100,000 and it is totally destroyed, they will pay up to, if it's 125%, they'll pay up to $125,000 to rebuild it. But if you go above that, you're out of luck. You're going to have to pay out of your pocket. The HE-7 policy is a complete replacement complete replacement on the dwelling. So in that same example, if we insure for $100,000 and for some reason it's $150,000 to replace it, either we figured wrong or prices of construction went up crazy, like it will happen after a tornado or a hurricane, we're going to pay it no matter what it costs. So you can rest assured that if you buy a policy, your home is going to be replaced if something happens. Here, you got to worry about if you had enough coverage. So that's a big advantage. Other advantage is contents coverage. On the HO-3, it's what's called named peril. There's 16 perils that have to happen for some of your contents to be covered. Those are the big ones like fire, lightning, theft, windstorm, those kind of things. Under the HE-7, it is named exclusion. So it covers all these things, but then there's a lot of other oddball things that might happen. Those you pick up extra coverage there. The exclusions here are the same exclusion here, but there's also a lot of extra stuff it covers. So If you don't know what kind of homeowners policy you have, give us a call. Klein Hall Agency, we're here in Greenville, North Carolina, 756-5200, or you can find us on the web at kleinhallagency.com. Thank you.